मैं भी होते हूँ
मैं starting.
Jackets होगी black.
Good evening, students and teachers. We welcome you here to the third session, where we will take up issue of shares, one of the most important chapters in the syllabus. I first introduce Sir G.S. Grewal here. He will be taking up the queries in the end, and he will also be giving his value adds in between. And the presentation will be made by Mr. Gaurav Palya, who's a teacher with the DAV school, and now
very well experienced.
Yes, very well experienced teacher. So we hope the previous sessions have been beneficial for the students here, and we hope this one as well will be equally beneficial. So would sir like to say something here before we start?
Yes, Rima rightly said, accounting of share capital is an extremely important chapter. And from the company accounts, only this chapter is here in this term one. So it assumes more importance because certain number of marks has been assigned to company accounts. So in this chapter, not only issue of shares, forfeiture, pro rata allotment, forfeiture, and reissue of shares will also be discussed. And all these topics, along with the number of questions which we have received, have been incorporated by our friend Mr. Gaurav in the PowerPoint presentation. So I will request Mr. Gaurav to now make the presentation.
Thank you, sir. Thank you. Good evening, students. Hope you are doing well. And now you are prepared with your upcoming board exams. If not at all, you are preparing well for it. You are working hard for it. Now, dear students, topic for the day is issue of shares. And as the sir said, it carries a good marks. So it is of 12 marks in your term one paper. So when I'm saying 12 marks, so out of 40 marks, it is carrying 12 marks. So 30% of your marks are from this chapter or this unit, you can say. So you will be finding 15 odd questions in your board paper out of this only chapter, and 12 marks are carrying as per the 40 marks term one paper. So now let's move on with the presentation, and side by side we are discussing some topics also. Now, in this topic, what is issue of shares or what is share capital? Share capital, as we know, it is a capital raised by the company through the issue of shares. See, the company is a group of persons and they need the public to invest in the company, to finance the company. And then they have to raise the shares. And the money raised by issuing of shares and the money collected by issuing of shares is share capital. Then, what is share? It is a fractional part of the capital of a company. A share is an ownership security and a shareholder is an owner of the company. So whosoever has got the shares of the company, he or she becomes the owner of the company, a part owner of the company. So for example, a company has 40,000 shares, and out of those 40,000 shares, if I'm having 4,000 shares of that company, I am the 10% owner of that company. I have got 10% voting rights of that company. I have got ownership rights of 10% of that company. So that's what we call share. Then there are two types of shares. One is preference shares and second is equity shares. Now, preference shares means the shares which carry the preferential rights. As the name says, preference. priority. So they are getting priority from the company side for the payment of dividend. And even if the company is repaying the amount of funds, the amount of capital, preference shares will be repaid first. As the name says, preference. So they are getting the priority. They are getting the fixed rate of dividend. And what are equity shares? Those shares which are not the preference shares, they are the equity shares. So let us understand the difference between these two, equity and preference shares. Just check it out, dividend. In preference, the dividend rate is fixed. In equity, the rate of dividend is not fixed. It means equity will get all the residual profits. Out of the profits of the company, firstly, we pay the interest to the debenture holders or to the lenders, to the borrowers. Then the remaining profit is profit before tax. Out of that profit before tax, we subtract tax from it. The remaining is profit after tax. Now, this profit after tax will be firstly used towards payment of preference dividend. And then after payment of preference dividend, the remaining profit is for equity. That profit for equity, company can either utilize the full amount to pay the dividend. When I'm saying company, it means directors can propose the full dividend, or the directors can propose a part out of the profit as dividend, and remaining can be kept as retained earnings or reserves for the future. Then repayment. As the name says, preference will get the priority for the repayment, and equity will be repaid only after the preference dividend, preference capital is paid. Rate is fixed in preference. It is not fixed in equity. Preference shares can be converted into equity, but equity cannot be converted into preference. Then preference do not carry any voting rights in general scenario and normal scenario, but equity shares do carry the voting rights. Then participation. Equity shareholders do participate in the management because they have got voting rights, but preference shares do not participate in the management of the company. So dear student, this is a very important slide for you, because on the basis of this slide, there can be a one question based on equity and preference shares in your question, in your paper. Next. Next point, categories of share capital. First is authorized share capital. Now, what is authorized share capital? It is a capital authorized by the memorandum of a company to be the maximum amount of shares or maximum amount of share capital which the company can raise during its lifetime. It is also known as nominal share capital, also known as registered share capital. So authorized capital is also known as nominal share capital. It is also known as registered share capital. The very simple thing is the total amount of shares which the company can issue during its lifetime. It is permitted through its memorandum. Company cannot issue the shares beyond their authorized limit. Next, issued share capital. It is that part of capital or that part of authorized capital which is issued to the public, which is offered to the public or other stakeholders. It may be issued to the underwriters, it may be issued to the vendors, it may be issued to the promoters. So the total amount of shares which the company is either offering to the public, to the vendors, to the promoters, to the underwriters, to the directors, it all comes under issued capital, the shares offered by the company. Then subscribed capital. It is that part of issued capital which has been actually subscribed by the public. The shares actually applied for by the public. Subscribed capital can be equal to issued capital, can be less than issued capital, but cannot be more than issued capital. In simple scenario, you have got 50,000 shares issued to the public. The company cannot get more than 50,000. Company cannot issue more than 50,000 shares to the public. So subscribed capital cannot be more than that 50,000 shares. Then is called up capital. Now, as we know, the share capital has got some face value. The shares have got some face value. Suppose a share is having a face value of rupees 10. This 10 rupees, the company can call whole amount of shares at a go, or company can even ask for this 10 rupees in parts. Let us suppose 2 rupees on application, 3 on allotment, 3 on first call, and 2 on final call. So till date, Let us suppose company has made only up till first call. The final call of ₹2 has not yet been called by the company. So the called up capital will be 8 per share. So 50,000 shares, let us suppose company has offered, company has issued, and the public has applied. So issued capital means the company issued the shares. Called up capital means the amount of shares which the company has called for. Company ने अब तक कितने रुपए मंगवाए, कितने called up किए, that's called up capital. So 50,000 shares into it will be the 4 lakh is the called up capital. And last but not the least is our paid up capital. It is that portion of the called up capital which has been actually received from the shareholders. Mind it, paid up capital means called up less calls in arrears. I'm not adding calls in advance in it. Calls in advance is not a part of share capital. It is a current liability for the company. Till the date the company is not making that call, it is a part of current liability, which you will understand in the next part of this webinar series. But paid up capital is called up capital less calls in arrears. There's one more thing, that is reserve capital. Now, this reserve capital is also decided by the company or by the directors. It is that portion of uncalled capital which has been reserved by the company, reserved by the directors, that they will make that call, ask that money from the public only in the event of winding up. When the company will wind up, when the company is going to close the business, only then this reserve capital can be asked for by the company from the public. Now, let us take one example. Suppose a share of face value ₹100, payable on application ₹10, allotment 20, first call 20, application 10, allotment 20, first call 30. Till here, the company has invited. So the called up capital is ₹60 per share. Called up capital is ₹60 per share. The remaining uncalled capital, which is ₹40. And out of this, let us suppose company has decided that they are going to make ₹25 as reserve capital. It means they will call this ₹25 per share only in the event of winding up. Only in the event of winding up. So that becomes a part of reserve capital. And the remaining will be ₹15. They can make as call whenever they want to. But till the time they are not being offered, this will be a part of reserve capital. And this much the company can ask for during the lifetime. But this reserve capital can only be called at the time of winding up of the company. So I hope till now it is clear. The types of share capital, categories of share capital is clear. Now let's move on to the next portion. The next part is, let us go through one question. A company was registered with an authorized capital of ₹40 lakh, divided into 4 lakh shares of ₹10 each. Now, this is the authorized capital, 40 lakh rupees. The company offered 60,000 shares for public subscription. What is issued capital? Dear students, you will be able to find such types of questions in your board exams also. You might take it as very easy question, but you will find these types of questions in your board exams. So yes, anyone? 60,000 shares were offered to the public for public subscription. Anyone? What is the issued capital? Yes, answer is option D, ₹6 lakh. How it comes? 60,000 shares into 10 rupees. 60,000 shares into 10 rupees is your issued capital. If in the same question authorized capital would have been asked, then the answer would have been ₹40 lakh. 4 lakh shares into 10. So just read the language of the question, what is actually being asked in the question, whether they're asking for the called up, paid up, issued, or authorized. read the question very carefully. Let's move on to the next question. A company invited issued 50,000 shares of rupees 10 each. First call of rupees 3 per share was made on 15th of September 2020. Second and final call of rupees 2 per share can't be made before. Again, it's a legal consequence. The legal right says, or Companies Act says, there must be at least 1 month gap between two calls. So if the first call was made on 15th of September, the second call cannot be made before 15th of October. So answer is option B. And you will be finding even such questions in your board exams. So you have to read each and everything very carefully. MCQs might seem very easy. You might say, akkad bakkad bambe wo we have to do. It's not like that only. You have to read the question carefully. You have to go through each and every concept very carefully to answer these multiple choice questions. Let's move on to the next portion. Now, what are the different steps for issue of shares? The first step is the company will issue a prospectus. Prospectus is an invitation made by the company to the public for selling their shares, or the asking the public to buy the shares, to invest in the shares of the company. In this prospectus, the company will give details of all the issue, terms of issue, name of stakeholders, who are the bankers, who are the underwriters, every detail of the company which will affect the decision of the investors must be given in this prospectus. It's just like a complete biodata of the company. On the basis of that biodata, you have to decide, you means the investors will decide that whether they want to invest in this company or they don't want to invest in this company. So this is what we call prospectus. Now, on the basis of this prospectus, the public will apply for the shares. Now, remember one thing, when the public applies for the share, it means they are just sending the request. They are just showing their interest in the company, that they have to, or they want to have the shares of the company, but they are just applying for it. They haven't got the shares as yet. So they are not the shareholders as yet. They are just the share applicants. Now, after scrutinizing all the forms filled by the interested public, prospective investors, the company will allot the shares, and that step is known as allotment of shares or share allotment. In this scenario, the company will ask the face value of share in different parts. Let us suppose 10 rupees share is there. So 2 rupees company has called on application. Now, whosoever will get the allotment of shares, company will ask them to pay the allotment money of rupees, let us suppose 3 per share. And then if requires, the company will also ask for the first call, second call, and so on. The company can divide this 10 rupees in 2 parts. They can even ask for the whole amount of shares at a go with the application itself. The company can make different calls also. But whatever it is, the company has to mention in their prospectus. It's not that the company will decide later on. They have to mention in their prospectus that what amount of shares, what amount of money of share face value will they going to invite for application, allotment, first call, and so on. Moving on further, then calls. If the share is face value of share is not completed till allotment, that company can also go for the calls. First call, second call, third call can be there. Moving further. Now, there is a case of under subscription. I take it like this. Your mother has invited 10 persons for a family dinner. And out of those 10 persons, only 8 people turned up. That's what we call under subscription. Under subscription means the number of shares offered by the company, but the public has applied for lesser number of shares. It means subscribed capital will be lesser than the issued capital. When the number of shareholders or number of shares applied for is less than the number of shares offered for, it is called under subscription. The only thing is, now just imagine, mother has invited 10 persons for a family dinner. Only 8 have turned up. Now what you are going to do? Are you going to ask them, you have to eat more? Or you will serve the food of 8 people to 8 persons only? Yes, you will serve food of 8 people to 8 only. So whatever the number of applications have been received, the company can only allot that much number of shares provided it fulfills one more condition, that is a minimum subscription. That is also a condition that company must receive minimum subscriptions, which is as per SEBI guidelines, 90% of the issued share capital. It simply means, let us suppose company is invited for 80,000 shares and the public has applied for even less than 72,000 shares. 90% of 80,000 is 72,000 shares. So the public has applied for even less than 72,000 shares. The company cannot go for the subscription. The company cannot allot the shares. The company has to reject all the applications and refund their application money within a stipulated time period. Otherwise, if the company is, let us suppose public has applied for 75,000 shares, so the company can issue 75,000 shares to the public, but not more than that. The remaining 5,000 shares may be issued in the second step later on, but now only the company can issue only and only 75,000 shares, which has actually been applied by the public, where the public has shown the interest to you. So I hope under subscription is clear to you. Minimum subscription, as you know, it is 90% of the entire issue. Whatever issue the company has made, the public or the stakeholders must apply for 90% of the entire issue. Let us understand this question based on the concept we have discussed. Just go through this question. It's Abracadabra Limited issued a prospectus inviting applications for 3,000 shares of ₹10 each, payable on application ₹3, 5 on allotment, and the balance on call. Public had applied for certain number of shares. It's not given how many of shares, but a certain number of shares, and the application money was received. Which of the following application money, if received, can't go for allotment of shares? Just understand, just think over this question, dear students. Anyone?
Receiving C and D as options.
C and D.
Yes.
Okay.
A also.
Okay, great. Whosoever has given A as answer, heads off. You are right. The answer is 7,500. Now, what's the reason behind this? I'm also going to explain you the reason. Now, 7,500 received as application money, which is of 3 per share. It means how many shares the public has applied for? The public has applied for 2,500 shares, which is less than 90% of the issued share capital. How many shares was issued by the company? 3,000 shares. 90% of 3,000 shares is 2,700 shares. So if the public has applied for 2,500 shares, the company can't go for the allotment. So it is less than 90%. So dear students, it's not a direct question. It's not mentioning anyway minimum subscription, but the question was indirect, hinting towards minimum subscription, because only this is a situation where the public can't go for the allotment, less than 90%. I hope the question is clear to you. Can we move on? Next. Next is oversubscription. Now, what is oversubscription? Undersubscription means only 8 people have turned up in spite of 10 being called up. Now, oversubscription means your mom has invited 10 persons for a family dinner and 12 persons have came over for a dinner. Now, what is the option with you? What are the possible options there? You have food made only for 10 persons. Starters, main course, and sweet dish. Starters are application, main course are allotment, and sweet dish are calls. So you have got the food prepared only for 10 persons, but 12 have turned up. Now, what to do? Oversubscription is this situation where the shares applied by the public is more than the number of shares offered for issue. It is known as oversubscription. So what are different options available? The first option, you will simply say no to the 2 persons. Tata bye-bye to the 2 persons. You will simply reject their applications. This is the first situation. The company cannot issue more shares than what they actually invited for. So the three possible options are, first is rejection, where the access application will be rejected. Now, when I'm saying their applications will be rejected, so whatever application money has been paid by them will be refunded. Will be?
Question is being asked whether it will necessarily have to be refunded or it can be adjusted for the subsequent calls.
When the shares have been rejected, the money has to be refunded. It just take one example. You go to a restaurant. In that restaurant, the rate is 1,000 per thali or per person as a buffet system. The payment is as follows. When you enter the restaurant, you have to pay 100 rupees. When you sit on the dining table, you have to pay 300 rupees. When the food is being served to you, you have to pay 400 rupees. And when you are getting out of that hall, you are paying the balance 200 rupees. So these are the different calls. Now, when you are entering the hall, the dining hall, you paid 100 rupees at the first check. There is a door entry. Now, in that entire area, there is no sitting space available for you. It means you are not being offered food over there. So on the way back, will you take rupees 100 back or not? You will definitely take 100 back rupees. So it is rejection. It means when the company is not offering the shares to you, the company is not allotting the shares to you due to any reason. Either it was a minimum subscription case or it is a case of rejection method under the oversubscription. The company has to refund the application money within a stipulated time period. Next, it is pro rata allotment, the very, very hot topic of this chapter. Pro rata allotment.
There is a request from many students to discuss the previous question.
Okay.
Under subscription.
Under subscription. Okay. I'm getting back to it. Let's read this question again. 3,000 shares were offered by the company to the public. Payable rupees 3 on application, 5 allotment, and balance on call. Now, 3 on application. Now, question is asking for which of the following application money, if received, can't go for allotment of shares. So suppose the company has received rupees 8,100 as application money. 8,100 as application money means how many shares have been applied? 2,700. 8,100 divided by 3. I'm using the board for you. Situation 1 is rupees 7,500. 2 is rupees 8,100. 3 is rupees 9,000. And 4 is rupees 9,900. Application is of rupees 3 per share. So in this situation, applications were received for 2,500 shares, 2,700 shares, 3,000 shares, 3,300 shares. Offered were 3,000. Received application for 2,700. It is 90%. Acceptable. 100%. Acceptable. 110%. Acceptable as application money, although can't issue more than 3,000. That's an oversubscription. But hereby, it is less than 90%. So when I'm saying less than 90%, the company can't go for the allotment because it is not fulfilling the case of minimum subscription. So the company will have to reject all the application money and refund their money. That's what we call not received the minimum subscription. Moving on further. So the first method is oversubscription rejection method. When I'm saying rejection method, it means whole of the application money received from that group of shares or that group of investors, that group of applicants will be refunded to them. Second is pro rata allotment. When I'm saying pro rata allotment, it means allotting less number of shares, those who have applied for more number of shares in a certain proportion. Not rejecting anyone, but in a certain proportion, proportionate allotment of shares, pro rata allotment. Suppose as per 10 persons, let us suppose 6 puri per person were being prepared. So 10 into 6, 60 puris were there. 12 people have turned up for the dinner. So instead of rejecting the 2 persons, saying no to 2 persons, you are serving 5 puris to each and every person. So the one who asked for 6 puris was being served 5 puris, but no one was being rejected. No one was being asked to reject or refund the application money. So it's what we call pro rata allotment, allotting the less number of shares than what they actually applied for. So when the less number of shares have been allotted, but they have paid more application money, here the excess money will be utilized towards subsequent calls, or we can say towards allotment. Towards first call if the articles permit for the same, otherwise only till allotment. And next is combination. So when I'm saying combination means few portion of the applicants will be rejected, few portion of the application might be given full allotment, few portion of the application might be given a pro rata allotment, but it's a combination of all. It means in this situation, there will be certain group of applicants who will be rejected. There will be certain group of applicants who might be given the pro rata allotment. Dear students, this is a very important topic, oversubscription, pro rata allotment. From the last 20-25 years, I have never seen a board paper without this topic, pro rata, in their paper. So it's very important.
One interesting question is that
Yes.
in pro rata allotment, what if only somebody applied for only one share?
Great. The shares can't be allotted in proportion, number one. But when the company issues the shares, offers the shares, you can say condition is given by the company in their prospectus that you have to apply for minimum this much number of shares. A minimum application is being set by the company through their prospectus. So even if the company has not set any minimum, or you can say minimum criteria for the application, a shareholder has applied for 1 share and the company has made 50% allotment. You can say 2:1 share. So 1 applied means 0.5 will be allotted, won't be allotted at all. Next. So these are the entries. First entry, bank to share application. When the shares, the public has applied for the shares. Second is share application to share capital. When the company utilizes the application money, and when the company utilizes the application money, they becomes the shareholder, and shareholders are just like the owners of the company. So the money paid by them towards application will be considered as the capital and will be transferred to share capital. Next, share allotment account debit to share capital. Now allotment is due. Generally, students might ask for or think for that in application, why we are passing bank entry first and then the capital entry. But in case of allotment, we are passing the capital entry first and then bank entry. Just because of the fact that the applications were being received by the company from the general public. It was being offered by the company to the general public, not to a specific group of persons. But when the company has received the applications and allotment has been made, now it is restricted to a certain group of persons who have actually been offered the shares, actually been allotted the shares, and now they are the shareholder of the company, and only they will be asked for allotment, first call, and subsequent calls. So in this, the same way, first call will be due, first call will be received, and these are the set of entries which are there in this chapter, issue of shares.
Some more questions to ask.
Yeah, please.
Why don't we directly credit to share capital?
At the time of application, because the public, when issue the shares, offer the shares to the public has to first apply for it. You can't get the shares straight away. Dear students, when you took admission in a school, on the same day you get the admission? No. You had first applied for it. You had shown your interest to get admission in that school. So it means you have applied for a seat. You have applied for a share. After seeing your past performance, after seeing the details submitted by you in the form, the school will decide whether they have to give admission to you or not. So that's what we call allotment. So there's a time gap. Firstly, company asks the public to apply for it. It's very simple. Although The company needs the funds, but still the company has got an upper hand. Company will simply say, first of all, apply for it. And then the company will decide whether they have to allot the shares to the specific person or not to allot. It may be that minimum subscription is not received, so they have to reject all the applications. It may be that there is a case of oversubscription and the company cannot allot to all the applicants, so it can be a different scenario.
बहुत ज़्यादा रिक्वेस्ट है कि ये वाला टॉपिक नहीं समझाते, बहुत सारे स्टूडेंट्स हैं
Okay,
नहीं समझते.
sure. Oversubscription means जितने शेयर्स पब्लिक को कंपनी ने ऑफर करे हैं, पब्लिक ने उससे ज्यादा के लिए अप्लाई किया है. पब्लिक ने उससे ज्यादा के लिए अप्लाई किया है. सपोज कंपनी ने ऑफर करे 50,000 शेयर्स 10 रुपीज के हिसाब से, और पब्लिक ने अप्लाई कर दिया 60,000 शेयर्स के लिए, 60,000 शेयर्स के लिए. अब सोच के देखें, ओवर सब्सक्रिप्शन है, बट द कंपनी कैन नॉट इशू मोर देन 50,000 शेयर्स, क्योंकि जितने शेयर्स कंपनी ने इनवाइट करे थे वर बीइंग इनवाइटेड आफ्टर ड्यू परमिशन फ्रॉम सेबी. तो कंपनी 50,000 से ज्यादा शेयर इशू नहीं कर सकती. तो व्हाट आर द डिफरेंट ऑप्शंस? क्या क्या ऑप्शंस बचती हैं कंपनी के पास? ऑप्शन नंबर 1, रिजेक्शन. जितने एप्लीकेशन ज्यादा आई हैं, रिजेक्ट कर दो, उनका पैसा रिफंड कर दो. सिचुएशन नंबर 2, प्रपोर्शनेट अलॉटमेंट. थोड़ा थोड़ा कम कम, रैशनल वे में थोड़ा कम कम रेशो में दे दो. 5:4 रेशो, 3:2 रेशो, लेकिन सबको बराबर बराबर, किसी को ज्यादा कम नहीं. जितने अप्लाई करें उसके प्रपोर्शनेट में दे दो. सपोज रेशो इज 5:4, तो अगर मैंने अप्लाई किया 5,000 के लिए, मुझे मिलेंगे 4,000. आपने अप्लाई किया 10,000 के लिए, आपको मिलेंगे 8,000. किसी ने अप्लाई किया 20,000 शेयर्स के लिए, उसको मिलेंगे 16,000. रेशो विल रिमेन सेम. एंड थर्ड इज कॉम्बिनेशन. सो व्हेन आई एम सेइंग कॉम्बिनेशन, इट मींस उसमें कुछ पोर्शन रिजेक्ट भी हो गए, कुछ एप्लीकेंट्स, कुछ को प्रपोर्शनेट भी दे दिया. आई होप इट इज क्लियर. मूविंग ऑन फर्दर, देयर इज वन क्वेश्चन फॉर यू. Just read this question. Reissue Limited registered with an authorized capital of rupees or 6 lakh shares of rupees 10 each. The company offered 1 lakh shares for public subscription. Full amount was payable on application. Which account will be opened by the company in such case? Whether it is share application or share allotment, share application and allotment, share allotment and applications.
Receiving A, C.
AC. Dear students, when the full amount is payable on application, it means it is a combination of application and allotment. It can't be D at all. Allotment cannot be before the application. So it will be answer is C, share application and allotment. Share application and allotment. So there can be a 1 mark question for you in the same way, and the 4 options will be given you like this: banking on debit to share application, banking on debit to share allotment, banking on debit to share application and allotment, banking on debit to share allotment and application. The answer will be C. It is share application and allotment. Do note, there is no application without allotment, and vice versa. There is no allotment without application. So just remember this. Moving on further. Terms of issue. The shares can be issued at par. When I'm saying at par means a share of the face value of rupees 10 per share is issued for rupees 10 per share, neither at higher value nor at the lesser value. A share of 10 issued for rupees 10. Issue of shares at premium. Some highly reputed companies, some high-tech companies, some well-reputed companies can ask for higher amount for their shares. So it means a share of rupees 10, face value 10, when issued for a price higher than its face value, let us suppose 12, 15, 20. Do note there is no cap on the maximum rate of premium. There is no maximum limit. A share of rupees face value 10 can be issued for as many as 650 rupees, and 640 rupees is the premium. Can be issued for rupees 800 rupees, 790 is the premium. But the face value is rupees 10. Now, whatever extra amount the company is asking from the shareholders, apart from the face value, the face value portion will be credited to share capital, and the excess amount over and above the face value will be credited to securities premium reserve. A new account will be opened by the company, securities premium reserve. Do note, dividend will only be paid on the face value. not on the premium amount. Then the shares can be issued at discount, but not for the general public. Why I'm sharing this, you might have heard for the shares cannot be issued at discount, but a question can be there, even it was there in the sample paper, the shares can be issued at discount only under, answer is sweat equity. So sweat equity means where the shares are being offered to the employees, directors. It is part of sweat equity. Only this is the category of shares which can be issued at discount. So when I'm saying discount means the price lesser than the face value. A share of 10 is offered to the employees or to the directors, say at rupees 9 per share, 9.50 per share, it can be there.
Questions?
Yes.
What is the difference between, if there is any, between ESOP and sweat equity shares?
See, ESOP is the shares offered by the company to the employees only. It is a part of sweat equity. So the question comes, sweat equity and ESOP are two different terms. It is false. ESOP is a part of sweat equity. It is true. ESOP means the shares are offered to the employees with a certain terms and condition. And the sweat equity means the shares are offered to the directors, employees for providing technical know-how or rendering the services. So sweat equity is a wider term and ESOP is a part of it.
More questions. Now, while we were discussing issue of shares at discount, what if the question simply asks, can a company issue shares at discount, whether it is true or false?
True false question won't be there, dear students, in the board exam.
In any other way possible.
The question is having ambiguity. The question language must be very much clear. The language could have been like this. The company cannot issue the shares at discount except dash. First option will be except when issued to vendors. Second can be except when issued under sweat equity. Third is when issued to the general public. Fourth is when issued to the underwriters. And answer is issued under sweat equity. So the question must be very much clear because it has been going different directions. On the one hand, we are saying the company cannot issue the shares at discount, but to the public. The company can issue the shares at discount to the employees, to the directors.
Then one more question. Is the premium declared in prospectus or after applications are received?
Premium is always and always mentioned at the time of issue of shares. Premium is always mentioned see, when the company is offering the shares, the company will have to decide at that point of time itself, and they have to let the public know that what is the face value and how much actually they have to pay. So share of rupees 10 issued at rupees 20 premium, it means the issue price is 30 rupees. So when you are going to a shop to buy something and shopkeeper says this is of rupees 500, and when you go to the billing counter, the shopkeeper says, oh, you have to pay 300 more just because of the high demand of this product. So will you be paying that high price? No one will pay. So when you are entering the shop, it must be clear at that point of time that this is rupees 500 product. You have to pay 300 extra just because of high demand of it. So when the shares are being offered, the company will have to mention at that point of time itself that what is the premium amount for such shares, such issue.
Whether for ESOP it can be at a discount.
Yes, ESOP can be a discount. It's a part of sweat equity. Yes. Moving on further, calls in areas. Calls in areas means when the company has invited the calls, company has invited the money, but the shareholders have not paid the amount due. It's just like fees is due for a particular month in a school, and some students are not able to pay the fee for that particular month due to X number of reasons. So hereby, the areas means the company has invited the money from the public, but the shareholders are not able to make the payment of the calls. So company will charge interest on calls in areas as per the rate mentioned in the articles. Otherwise, they will charge at the rate of 10%. You have to remember this 10% rate. It can be there in your board paper because the calculation of interest is not in syllabus, but the rate of interest on calls in arrears and rate of interest on calls in advance is a part of syllabus. Do note, if the article say 8%, 12%, it will be charged at that very percent. Because companies are not saying minimum 10%, just saying 10% per annum if the articles are silent. Next is calls in advance. It's just opposite to that. So when a company has not yet made any particular call, but the shareholder has paid the money in advance and the company has accepted that money, that's very important. Company has accepted that excess money, it will be credited to calls in advance, and it is not a part of share capital. It is treated as other current liabilities till the time that particular call is not made due by the company. Again, if the company has accepted the money in advance, the company is bound to pay the interest as per the rate mentioned in the articles. And if articles is silent, then it will be paid at the rate of 12% per annum by the company as per Companies Act. One question for you. Is there a question, ma'am?
Yes.
Yes, please.
So there's a question which says, shouldn't it be table F instead of table A? Volume in the previous slide.
Okay. So is it table A or table F? I'm a bit confused.
Table F.
Table F. I'm so sorry, dear student. It's table F. Earlier it was
Yeah.
A in the
It was
56.
Vrinda had mentioned it.
Thank you, Vrinda, for the
Directly
correction.
pointed out.
Thank you, Vrinda.
Then do we have to calculate the amount of interest, and then why is there a need to charge and pay interest?
Dear students, we don't have to calculate the interest. Calculation of interest portion is not a part of our syllabus. Calculation of interest is not a part of our syllabus. It's just the rate you have to remember as per the table F of the Companies Act. You just have to remember the rate. And that is only applicable if the articles are silent. If the articles are clearly mentioning a rate, it will be charged or provided at that rate only. One more question for you, dear students. Timbuktu Limited invited applications for 50,000 shares at ₹10, 3 on application, 5 allotment, 2 on call. All the dues were duly received except call money on 2,000 shares held by Kumar. Total of cash book will be what? And total of calls in arrears will be dash. Answers are coming, ma'am?
Yes, sir. D.
Great. Great going, students. Answer is D. And here's the calculation for you. The calculation says total amount to be received was 50,000 into 10 because whole amount of shares have been called by the company. So total amount to be received was 50,000 into 10. That is 5 lakh. Of that, call money of ₹2 were not being paid by 2,000 shareholders or 2,000 shares. So 4,000 is the calls in arrears, which is not received. So out of total amount 5 lakh, 4,000 not received. So the bank column was debited by 496. It is a total of cash book. And the total of calls in arrears will be ₹4,000. Good. Next question for you, dear students. I think it's the same question. Okay, this is the calculation part. Moving on further. Jugaad Limited was registered with an authorized capital of 16 lakh equity shares of ₹20 each. Company invited applications for 2,50,000 equity shares, payable ₹4 applications, 6 allotment, balance in 2 equal calls. All the money has been duly received except allotment money on 3,000 shares, first call on 5,000 shares, and final call on 10,000 shares. The total calls in arrears will be. Yes, dear students.
D.
Answer is D.
Only one answer, 2 answers have been received.
Okay.
D.
Let's check out the calculation.
What means B has come?
Okay. Allotment not received was 18,000. First call not received on 5,000 shares, ₹25,000. Final call not received on 10,000 shares, ₹50,000. So the total of calls in arrears was 93,000. Let's move on further.
There's one question.
Yes, ma'am.
Student Ankit is asking, sir, who do we charge the interest from? It pertains to the previous interest.
From the shareholders who have not paid the calls in due time. It's charged from the shareholders only. And again, if they have paid in advance, interest is paid to them only.
And then on the previous question,
Mhm.
there are questions coming that if a person who did not pay allotment,
Mhm.
he would have not paid calls as well.
Yes.
So,
So where I have written this 3,000
yeah.
shares belongs to different name, 5,000 belongs to different name.
yes, they're all different people.
It's not
They're
mentioned. So it simply means 5,000 includes 3,000 shares, 10,000 includes 5,000 shares. A question is very good because if the question clearly mentioned, accept allotment money on 3,000 shares held by Ram. First call money on 5,000 shares held by Sham. Final call on 10,000 shares held by Mohit. If the question was clearly this, then would definitely be there. That the first call allotment was not paid on 3, first call on 8, and second call on 18. But hereby, on the safer side, we'll assume that first call of 5,000 shares unpaid includes that 3,000 defaulters. Final call of 10,000 unpaid includes the defaulter of 5,000 itself. Because the names are not mentioned over here.
Then we
Yes.
will we subtract application money also from calls and arrears?
Can application be, you guys are unpaid? Can there be a situation that application money is unpaid? It's just like you are saying to the company that, company, I want to apply for the shares, but right now I don't have money. But please allot me the shares. Will there be the allotment to you? No. Application money can never remain unpaid. See, at the time of application, you are showing interest to the company that you want to invest in the company, you want to become a shareholder of that company. So at that time, you won't show that you don't have money to pay them. You will pay them very well so that the company will take a step to allot you the shares. One more question for you, dear students. And here comes that point which the student was saying. Here clearly mentioned, Akbar holding 2,500 shares paid nothing after application. Birbal holding 3,500 shares paid nothing after allotment. And Chanakya holding 5,000 shares paid nothing after first call. Now, this is very clear over here that the allotment was not paid on 2,500 shares. First call was not paid on 6,000 shares. And final call was not paid on 11,000 shares. It is clearly mentioned over here. So you have to read the question very carefully that whether the names have been mentioned clearly or they belong to a same group of person or whatever the situation can be. So the accounts is one such subject where just a minor change in the language will change the meaning of the question, will change the answer of the question. So you have to read the question very carefully and answer accordingly. So let's move on. One more question for you, dear students. A company invited applications for 80,000 shares of rupees 10 each, payable rupees 2 on application, 3 on allotment, 3.50 on first call, and balance on final call. So first of all, you have to check it out. What is the balance amount? It is 1.50. Virat holding 3,000 shares failed to pay the first call, and Rohit holding 5,000 shares failed to pay the final call. What is the amount received by the company on final call? Yes, dear students. What is the amount received by the company on final call? Answer coming, ma'am?
B, C,
B,
B,
C.
and C.
Okay.
B and C are recurring.
Okay. Let's check it out. Answer is B. And let's understand the explanation. Virat was having how many shares? 3,000 shares. If he failed to pay the first call, he won't have paid the final call either. So Virat having 3,000 shares and Rohit having 5,000 shares. They haven't paid the final call. So final call was not received on 8,000 shares. 8,000 shares, final call not received into 1.50, which was the rate of final call. So rupees 12,000 money is not received. Total amount made due was rupees 1,20,000. Out of that 120, 12,000 was not received. So the call money received will be 1,08,000. I hope it is clear, dear students, now. So you have to check it out very carefully whether the question is mentioning the names separately or not mentioning the name separately. If in the same question, it would have been given that the first call was not paid on 3,000 shares and final call not paid on 5,000 shares, then we would have safely assumed that 5,000 shares who haven't paid the final call includes those 3,000 itself who haven't paid the first call. And then answer would have been 1,12,500. So read the question very carefully and answer only after understanding the complete length of the question, language of the question. Moving on further.
So one or two questions.
Yes, ma'am.
One student is very passionately asking one question. Sir, how do we pay this money? Through check or by some other means?
It is always paid by check earlier, but now being all things digitalized, so it is being just an online transfer. But to be on the safer side, you just assume it is paid through bank only. It won't be paid in cash. Even an amount of ₹1 is being paid by check or online transfer, you can say.
And one more question. When the shareholder is not paying call money, how and when will he pay interest?
The interest will be made due from the date of call money due. So from the date of that until the date he will pay the call money due, he will be paid. He will be paying the interest on that time period. Let's take it very simple. Your fee is due every month. By 10th of every month, you have to pay the fees. And the fee book or fee records or fee rules of your school says ₹20 per day will be charged as the fine. So suppose you haven't paid the fees on 10th of, let us suppose, November, and you are paying the fees on 18th of November. So you will be paying a fine of ₹160, ₹20 per day for 8 days. As simple as that. So due kab hua, kab pay kiya. This time duration will be taken the base for the payment of interest. Let's move on further. 80,000 shares were offered by the company of ₹10 each at 2 premium. The share was payable 3 on application, 4 on allotment, including 1 premium. Read the language very carefully. It's saying including. So it means share is of ₹10 plus 2. Payable application of ₹3. Allotment of ₹4, including 1 premium. That means 3 plus 1. And balance on first call. So what is the balance? It will be 4 plus 1. 4 plus 1. Public has applied for 75,000 shares. All the money has been duly received except first call money on 3,000 shares held by Kumar. What will be the bank balance of the company with the above issue of shares? So 75,000 shares into what? That's a $1 million question. Because the company has asked for not 10, but 12 rupees. So the total money due was 75,000 into 12. That makes it 9 lakh. And how much money is not being received? Not received from the one shareholder holding 3,000 shares. So 3,000 shares haven't paid the first call money of ₹5. So 15,000 not received. The balance of bank will be 8,85,000. And this is the solution in front of you. So dear students, these are very important concepts for you, very important cases for you, very important questions for you. Do give a look for these questions. And you have to practice a lot for such types of questions. Amrit Associates Limited invited applications for 2,50,000 shares, payable ₹3 on application, balance on allotment. What is the minimum amount of application money which the company must receive for issuing of shares? A very important question, a very basic question for here. 2,50,000 shares have been offered, ₹3 on application, and balance on allotment. So balance is ₹7 on allotment. What is the minimum amount of application money which the company must receive for issuing of shares? So answer is ₹6,75,000, making it 2,25,000 shares. That is a minimum subscription of 90%.
C was being The most common answer.
The question is minimum amount. So how we can utilize the SPR? We have discussed the premium. The premium money can be utilized towards issuing fully paid up bonus shares, buyback of its own equity shares, writing of preliminary expenses, providing for premium on redemption of debentures or preference shares, and writing of expenses or the commission paid or the discount on issue of securities or debentures. Very important topic, issue of shares for consideration other than cash. Here the company will issue the shares to some group of persons or a specific category of persons against the services, against any asset being taken over. Here the shares can be issued to the vendors from whom we are purchasing any asset or whom we are taking over the business. Here the shares can be issued to the underwriters who have given a guarantee to the company. Here the shares can be issued to the promoters who have initiated to start the company. The important point over here is you have to calculate the number of shares. The number of shares can be calculated by amount to be paid divided by issue price. When I'm saying issue price, so it means a share of rupees 10. Let us suppose issued at 20% premium. So 10 into 20% becomes 2. So issue price becomes 12. Face value 10 plus 2 premium 12.
Sir,
Yes.
questions. Issue price is paid up capital or called up capital?
Issue price is paid up capital.
And many requests to do the previous slide again.
Okay.
The one that they were answering SC. The question.
Okay. Yeah. This one.
I'm assuming yes. They were mentioning previous slide.
Hmm.
So I think it's this one only.
Okay.
This question.
They have to discuss. They want to discuss.
They want to discuss
Okay,
it again.
sure.
Yes.
Dear students, just check it out. First says, what is the minimum amount of application money which the company must receive for issuing of these shares? So if the company would have received rupees 6,75,000, how much shares have been offered by the company? 2,50,000 shares offered. What is the minimum subscription? 90%, making it to 2,25,000 shares. In the first case, it is saying rupees 6,75,000. So 2,25,000 into 3, making it 675. It means the public has applied for 2,25,000 shares. The second case says rupees 2,25,000 share amount. It means the public has applied for only 75,000 shares. Third says 7,50,000, making it 2,50,000 applications. Fourth says 6 lakh, making it as 2 lakh applications. So first case is 90%, making it to what? 90% minimum subscription. So it is the answer. But the question is saying minimum. Minimum, if the company would have received 6,75,000 rupees as application, the answer would have been A. That is 6,75,000. So let's move on further. Just read out this question. The company purchased assets of the book value of rupees 5,40,000. The purchase consideration was paid by issue of equity share of rupees 50 each at 20% premium. And dear students, I have taken rupees 50 face value knowingly, because most of the times you see that the face value is of rupees 10 or 100. But read the question very carefully, because sometimes it can be 50, 20, 25 also. So read the question very carefully. So here the share is of rupees 50, each at 20% premium. So what is the issue price? 50 plus 20% of 50 is 10, making it to 60. So 60 rupees is the issue price, and the amount payable is 5,40,000. So making it to 9,000 shares, which the company will issue to the vendors. It's a 1 mark question, but it requires some calculation. And it requires some, you can say, clarity of thoughts, also reading of question very carefully also, because the shares face value is rupees 50. Moving on further, Yuvraj Limited acquired the business of Sehwag Limited, including assets of rupees 5 lakh, liabilities of rupees 1,60,000 for a purchase consideration of rupees 3,60,000. What is the net asset amount? 5 lakh minus 160 becomes 340. A business of net asset value of rupees 3,40,000 is being purchased for rupees 3,60,000. So it means you are paying extra. There is a goodwill of rupees 20. Then payment was made by issuing equity share of rupees 10. So there is a question divided in two parts. First part was asking for goodwill or capital reserve. So when we are saying goodwill, it means the first two options are the only options which can be there as an answer. Because third and fourth option saying capital reserve, which cannot be the case. Then 360 amount was payable by issuing 10 rupee as the face value of share at 20% premium. So we have to divide it by 12. So making it 30,000 shares will be issued. And here is the calculation for you. Purchase concession minus net assets is 20,000 goodwill. Number of shares is 360 divided by 12, that is 30,000 shares. Next question for you. Anarkali Limited issue took over assets of rupees 20 lakh and liabilities of rupees 4,50,000. So the net asset amount will become 15,50,000. The company issued them 75,000 shares of rupees 20 each and a draft of rupees 80,000. So what are the different options over there and what it will result in? Read out the options very carefully. Are the answers coming, ma'am?
Not yet, sir.
Okay.
B.
Hmm.
B. D.
Okay.
B and
Purchase consideration is 15,80,000.
D. A also.
Okay. Solve it very carefully, dear students. The question is divided in two parts, so you have to calculate two answers. Yes, it will be. This is the question.
Yeah.
So answer is 15,80,000 and there's a goodwill of rupees 30,000. And this is the calculations for you. Because the company is paying them extra. The net assets were of rupees 15,50,000 and the company is paying them 15,80,000 as purchase consideration amount. So they are paying extra of rupees 30,000, which will be considered as goodwill purchase. It is a purchase goodwill. Very, very, very important topic, forfeiture of shares. It means cancellation of shares. Just simply saying, deleting the names of the shareholders from the books of the company, from the records of the company. The defaulter shares who are not paying their calls in spite of many reminders, the company just have to send them a legal notice and then the company can forfeit their shares. But the $1 million point is if articles permit for the same. But you don't have to consider the articles are permitting or not. If the question is saying the company is forfeiting, it means they are forfeiting. It is permitted from the articles. So what are the entry for forfeiture of shares which were issued at par? Share capital account debit, 2 forfeited shares or shares forfeited account, 2 calls in areas. See, forfeiture of shares happens because the company is not getting their calls in time or the shareholders have not paid. There are some defaulters who are not paying the calls in spite of sending many reminders to them. So the company has got a right to forfeit their shares and whatever amount they have paid till date will not be refunded by the company, will be forfeited by the company. So it will be transferred to shares forfeited account. And later on, suppose the shares were issued at premium. Earlier, the shares were issued at premium and the share premium has been paid by the defaulter. It will be same. Share capital account debit, 2 share forfeited to calls in areas, but the shares forfeited amount will not include the premium amount. The company can forfeit only the face value portion of shares. Do note this point. The company can forfeit only the face value portion of the shares. So if the premium money has not been paid, then it will be debited. So the entry will be share capital account debit, securities premium reserve account debit, 2 shares forfeited to calls in areas. See, SPR was created earlier when the call was due, allotment was due. But if it is not paid by the shareholder and the company is forfeiting their shares, SPR will be debited back. And then the company has got a right to reissue these shares. And these shares can be reissued at discount, even at premium. So reissue entry will be bank account debit, shares forfeited account debit to share capital, and the proportionate amount of forfeiture will be transferred to capital reserve. I'm saying proportionate because if all the shares are reissued, the remaining balance of forfeited will be transferred after subtracting the discount on the issue. This share forfeited which has been debited is actually the discount on the issue. So the question language can say a share of rupees 10 was reissued at rupees 8 per share, fully paid up. So indirectly 2 rupees discount is mentioned. A question can straight away says a share of face value rupees 10 per share is issued at a discount of rupees 3 per share. So you have to read the language very carefully, whether the discount is given or whether the amount of reissue price is given. And balance of share forfeited will be transferred to capital reserve.
A few questions.
Yes, ma'am.
Why do we use calls in arrears while using forfeiture?
You must have debited the calls in arrears at the time of money, if not received at the time of allotment or first call or so on. So since they haven't paid the money and you are canceling their shares, it means whatever arrears was debited, it won't be received now. So it has to be closed and has to be credited. So if you have debited it, it must be credited.
Then after how much time are the shares forfeited if the defaulters don't pay the call money?
I think it's a 14 days notice period which has been given. Am I right, sir?
Notice period is to be given.
Notice period?
Otherwise, company decides.
Okay. So company will decide. Otherwise, a notice period must be there. A company must serve the notice to the defaulters.
And then please tell the entry of premium in reissue.
If the shares have been reissued at premium, the entry will be bank account debit, to share capital account, to securities premium reserve. It will be again credited to securities premium reserve. But there is no linkage between the shares issued at premium earlier and the now shares reissued at premium. There might be different scenarios. Maybe earlier the shares were issued at par, but it can be reissued at premium. Maybe the shares earlier issued at premium, but now reissued at discount. But the important point is that discount on reissue cannot be more than the amount of shares forfeited on such shares. This is very important. Just look at this. Yes, any question is there?
Yes, it has been repeated many a times. Is share premium reserve a part of capital reserve?
Share premium reserve is not a part of capital reserve. It's different from capital reserve. Capital reserve can be used only to write off the capital losses. But SPR can be used for those 5 purposes which we have discussed in previous slides. Can be used for writing off preliminary expenses, issuing bonus shares, buyback of shares, and so on. So SPR is restricted reserve, which can be used only for specific purpose.
Then the previous question, the formula of capital reserve in the last part has been asked by many students.
The formula is the shares forfeited amount on the when you have shares forfeited. Suppose you have forfeited 5,000 shares and the shares forfeited amount was 30,000. So 30,000 divided by number of shares forfeited, that is 5, into, let us suppose you have reissued 3,000 shares, into number of shares reissued, minus discount on reissue. What is the discount which has been provided by the company on the reissue of shares? So if all the shares have been reissued, this capital reserve is merely a difference between the share forfeited credited earlier and now share forfeited debited at the time of reissue. But in many situations, all the shares are not being reissued. So in that situation, you have to calculate this capital reserve by applying this formula. It's just a unitary method, nothing else. Moving on further, just look at this question. A company forfeited 600 shares of rupees 10 each, fully called up for non-payment of allotment money of rupees 3 per share, first call money of rupees 2 per share, and final call of 2 per share. So it means total of rupees 7 was not paid. So out of 10 rupees share, 7 has not been paid. So how much they have paid? 3. 400 of these shares were reissued as fully paid up at the maximum rate of discount allowed. What will be the amount received by the company on reissue of shares? See, what is the maximum discount? I've already told you. The maximum discount can be the share forfeited balance on such shares. So the forfeited amount was rupees 3 per share. So the discount maximum which can be given on 400 shares is 3 per share, that is 1200. So the share of rupees 4000 with maximum discount of rupees 1200 can be reissued for rupees 2800 after providing the maximum discount. Read the question very carefully. It's not saying rate per share, it's saying maximum amount of the issue. One more question for you. Capital of rupees 10 lakh authorized 50,000 equity shares of rupees 10 each, 20 each. 20,000 are offered to the public. Amount received 6 on application, 10 allotment, balance on call. Issue was oversubscribed to 25,000 shares. How much they have invited for? 20. Oversubscribed for 25. It means 5,000 access applications have been received. Access applications were rejected and remaining were allotted fully. All the calls were duly made and received except the allotment and call money on 1,000 shares held by Rohit. His shares were forfeited and later on reissued at rupees 15 per share as fully paid up. The balance in share forfeited account and capital reserve will be. Now just imagine how many shares were forfeited? 1,000 shares were forfeited. How many have been reissued? 1,000 have been reissued. So in total, what is the difference? Since all the shares have been reissued, so the complete usage of forfeited shares will be there. So there will be balance nil. So when I'm saying nil, it means only option B and C left now. So we are safe. So out of the 4 options given, only 2 can be the relevant answers which can be there. So first part we have solved. Now, what is the discount we have provided? The forfeited amount on these shares was, he was paid 6 and 10, 16. Am I right? Yes. Now, allotment is not paid. So he has paid only rupees 6 per share. So 1,000 into 6, the forfeited amount was 6,000. Discount of rupees 5,000 allowed. So remaining it will be capital reserve, that is 1,000. So answer is nil and 1,000. Moving on further.
Question.
Yes.
Is reissue on discount always a loss?
Reissue at discount is a loss which is to be charged from the share forfeited balance. It means that discount on reissue amount cannot be more than the proportionate share forfeited balance. Yes, it's a loss, but it cannot be more than that forfeited balance. Let's move on further. Okay, just read out this question, dear students. 20,000 have been invited for, 25 has been applied by the public. Access were rejected and remaining were allotted fully. All the calls were duly made and received except the allotment and call money on 3,000 shares. His shares are forfeited and out of these, 2,000 shares were reissued at rupees 18 per share as fully paid up. So 3,000 were forfeited because they haven't paid the allotment and call money. So how much they have actually paid? They have only paid rupees 6. That too, including the premium. And I've already told you the premium money is not going to be forfeited. But hereby, the question is asking for what is the securities premium in the books after reissue. Just take it in. The securities premium was credited with how much? 20,000 into 40% of what? 20. So it was 8 rupees. So it was credited with 1,60,000. And since 3,000 shares were forfeited for not paying the premium on allotment and premium on first call, so the premium was debited with 3,000 into 4, that is 12,000. So the remaining will be 1,42,000. That will be the balance of SPR, which was being left in the books. Because when the premium was not paid by the defaulter and the company is forfeiting their shares, the premium money, the premium will be debited. Let's move on further. Pro rata forfeiture and reissue of shares. Although don't take it as a separate topic, the only thing is this type of question fulfills 3 conditions. And those 3 conditions are, there will be oversubscription. We have already discussed that. There will be proportionate allotment of shares. We have already discussed that. And the third point, and very important, is in proportional allotment, the access application money is transferred to calls, allotment or calls. And the defaulter fails to pay that very call up to which the excess money has been transferred. Suppose the excess money has been transferred till allotment only, and defaulter is not paying allotment money. Suppose the excess money is transferred till first call, and defaulter is not paying the first call. So whichever situation is there, whatever the stage till where the excess money has been utilized or transferred, the defaulter is not paying that call. This will be taking as a case of pro rata forfeiture and reissue of shares. Entries will remain same, so we are not going to discuss the entries again. One question with you. Munna Bhai Limited issued a prospectus inviting applications of 50,000 shares. Public has applied for 65,000 shares, out of which 5,000 were rejected. So remaining were allotted on proportion. So 65 may say 5 we have rejected. So what is the proportional allotment? Allotted 50,000 shares to the applicants of 60,000 shares. The ratio is 6:5. Jeevan had applied for 650 shares and Sumant had been allotted 1,000 shares. The shares allotted to Jeevan will be dash and shares applied by Sumant will be dash. I think answers have started coming, ma'am.
B.
Okay. Answer is B. And here becomes the solution for you. Allotted to Jeevan will be 50,000 upon 65 into 650. Applied by Sumant will be 65 upon 50 into 1,000. So if you have to calculate the applied shares, you have to keep applied upon allotted. If you have to calculate the allotted shares, you have to keep allotted upon applied. Let's move on further. Okay, let us go to this question. Ranjan, who had applied for 5,000 shares and was allotted 3,000 shares, paid application money of rupees 3. So he had applied for 5,000 shares. So he had paid rupees 3 per share on applications of 5,000. So he had paid rupees 15,000. But he was being allotted only 3,000 shares. So will the company refund the excess money? No. The company will utilize that excess money towards the allotment dues. But was not able to pay allotment money of rupees 5 per share. He paid all his dues along with first call of rupees 2 per share. What amount was paid by Ranjan at the time of first call? I'm not asking for what is the calls in areas at a time of allotment, what is the allotment money not paid. I'm saying he had paid his dues with first call. He was not able to make the payment of allotment, but he made the dues, he paid all the dues along with the first call. So the amount will be 15,000. Let us understand the calculations. Application money received was 15,000. Utilized was 9,000 on 3,000 shares because he has been allotted 3,000 shares. So the excess money was rupees 6,000. Allotment money due was 3,000 into 5, that is 15,000. Out of those 15,000, the balance of rupees 6,000, the excess money paid by the defaulter, was already being transferred from application to allotment. So he haven't paid the allotment of rupees 9,000. The first call of rupees 6,000 he is paying, plus allotment dues of 9,000. So total amount received from him will be rupees 15,000. First call 9,000 plus the dues of the, first call rupees 6,000 plus the dues of allotment areas 9,000. So he's paying total of 15,000. This is one question. Again, a very, you can say, calculative question where you just have to check it out because only one answer is there which is hinting towards in the very beginning. 600 shares have been allotted to Mohit on pro rata basis, but he had applied for 2:3. Or he must have applied for more number of shares. So here he had applied for 900 shares. 2 shares for every 3 applied. He paid application money of rupees 3 per share and could not pay allotment of rupees 5 per share. The call of rupees 2 per share was not yet made. So when a call of 2 was not yet made, so what was the called up? 8 rupee per share. So when we are forfeiting 600 shares of rupees 8 called up, the capital will be debited by 4,800, which is only there in one answer. That is option C. Because in all other options, 4,800 is not there. So it's a, you can say, calculative question where you just have to solve one part and the remaining will be there. Okay. Moving on to last portion, balance sheet presentation. The share capital can be presented in the balance sheet by adding three amounts. One is subscribed and fully paid up share capital. Second is subscribed but not fully paid up share capital. And third is share forfeited balance for the shares which have not yet been reissued. Subscribed and fully paid up means the company has made all the calls and the shareholders have paid all the money as asked by the company, or the company has made all the calls, the share is fully paid up, and all the amount has been received from the shareholders. Subscribed but not fully paid up share capital includes two things. First stage, either the company has not yet made all the calls. So if there's a reserve capital, the share cannot be fully paid till the company is going to ask that final call. It will always be in the not fully paid up capital. The second stage it can be that company has made all the calls, but few group of shareholders have not paid the total amount due. So we call it as subscribed but not fully paid up share capital. And last is share forfeited balance. The share forfeited balance for those shares where the shares have been forfeited but not yet reissued, their proportionate balance. Let's do just one or two questions for this. Kahana Limited has issued capital of 2 lakh equity shares of ₹10 each, payable ₹2 on application, 4 allotment, 3 on first call, and balance on final call. All the dues were received except Atharv holding 10,000 shares who failed to pay both the calls, and Dhwani holding 8,000 shares failed to pay the final call. What will be the amount appearing as share capital in the balance sheet of the company? Just check it out. What is the total shares made by the company? Authorized is there, we don't require that. Issued is there, we don't require that. The company has offered how much shares? 2 lakh shares. All the money has been received except by Atharv 10,000 and Dhwani 8,000. So 18,000 shares have not paid the full amount. So remaining 1,82,000 shares have paid the full amount. So subscribed and fully paid up will be 18,200 shares, sorry, 1,82,000 shares of ₹10, that is 18,20,000. Subscribed but not fully paid up will be 18,000 shares. 18,000 shares includes 10,000 shares of Atharv and 8,000 shares of Dhwani. So 18,000 shares of ₹10, 180, less calls in arrears of ₹48,000. Atharv has not paid both the calls, that is of ₹4 and 3. Sorry, 3 and 2. I'm so sorry again, 3 and 1. And Dhwani has not paid the final call of ₹1 per share. So Atharv has not paid 40,000. Dhwani has not paid 8,000. So total calls in arrears will become 48,000. So the amount is to be transferred to share capital will be, or to be shown as share capital will be 19,52,000. One more question. In the same way, where the share forfeited balance will be there. Because hereby you just take it out, the company did not receive the first call of ₹30 on 2,000 shares held by Kumar. And these shares were forfeited. The shares of Kumar were forfeited. Mr. Sharma, having 1,000 shares, paid the amount of second call with the first call. So they have paid in advance. Remember, I've already told you, calls in advance will not be a part of share capital. So what is the amount shown as a share capital? So it won't be a subscribed and fully paid up. It will be subscribed but not fully paid up of 28,000 shares, 80 called up hai, and the share forfeited balance of 2,000 shares held by Kumar, on which he has only paid ₹50 per share. So the share capital to be shown in the balance sheet was 23,40,000. Thank you very much from my side. I hope you must have taken care of all the slides. You must have discussed with your friends. Do ask your queries if you have got any in the chat box. Please.
Yes. We have received many queries through the session. Yes, we can start. Most of the queries were taken up side by side along with the session. but the ones that we received on email, as well as some of them which we could not take with the session, we'll take them up now. So this question has been asked by Mr. Shabar. What is money received against share warrants, and what is application money pending allotment? So, Gaurav sir.
Asked by
Mr. Shabar.
Mr. Shabar, you have asked two things. What is money received against share warrants? And second is share application money pending allotment. Let us understand share application money pending allotment. If the company has invited the applications, the public firstly applies for it. So entry passes bank account debit to share application. So by the time the company has received the applications, there's a time gap between application received and allotment of shares. And by the time the shares have been allotted, the closing date 31st March, when the books are about to be closed, books are to be closed by the company. So on that date, the money is kept as share application money, against which allotment is yet to be made. So it is kept as share application money pending allotment. But let us suppose the company has invited applications for 50,000 shares and the public has applied for 60,000 shares. Now, whatever the case is, the company cannot issue more than 50,000 shares. So the amount of application money of those 50,000 shares will be kept as share application money pending allotment. And the balance amount of 10,000 application money will be kept as other current liabilities, because either that has to be refunded if rejection method is followed, either that has to be adjusted towards allotment if the pro rata allotment has been followed. Am I right, sir?
Absolutely. Absolutely.
And the second question asked by you is money received against share warrants. See, when the company has to issue the shares, they have to first take permission from SEBI. And if for any reason SEBI has not granted the permission to the company for issuing of shares, the company can ask for the share warrants from their existing shareholders. Now, what is share warrants? These are the warranty against the shares. As the name says, share warrants are warranty against the shares. Now, what does it mean? If the company has received the money from share warrants against the share warrants, those warranty holders won't have to apply for the shares again in the future. Whenever the company is going to issue the shares with the due permission from SEBI, the shares warrants will automatically be converted into share capital. They don't have to apply for the shares again. This is the situation one. Second part is the share warrants will get the same rate of dividend as the company will pay on the share capital till the time they are not being converted into share capital. But the only point is they won't get the voting rights. So please add on.
In addition to this, share warrants are like share capital, where the company and the shareholder have agreed to issue shares at a predetermined price. So price is also determined. And conversion into shares is also certain. So in that is why it is shown as share money received against share warrants, and it is part of the shareholder funds. Thank you.
We take up the next question. This is by Mr. Gaurav Meni from Sacred Heart Convent School, Saneval. So he's asking, what is the journal entry when application money is adjusted along with premium?
When you receive the application money, at that time, you can't credit to SPR straight away, because at that time, the shareholder, the investor, or even the company is not sure about the allotment. So at that time, firstly, the amount entry will be bank account debit to share application with the total amount, including premium. When the shares will be actually allotted, then entry pass will be share application account debit to share capital with the face value portion, to securities premium reserve with the over and above the face value portion. Suppose a share of ₹10 each issued at ₹2 premium, application money of ₹3 and 1 premium. So total application money of ₹4. And if I have applied for 5,000 shares or company has received application for 5,000 shares, the company will pass the entry bank account debit to share application account ₹20,000, 5,000 into 4. At the time of allotment of shares, entry pass will be share application account debit 20,000 with 4 rupees, 2 share capital 15,000, the 3 rupee face value portion, 2 securities premium reserve, 1 rupee portion, that is 5,000 rupees, will be transferred to securities premium reserve.
Okay.
So securities premium reserve will go with the capital balance, with the capital entry.
You see, premium, although received at the stage of application, but still, unless until these shares are allotted, premium cannot be adjusted. That is why when the shares have been allotted, thereafter, the premium amount is transferred to securities premium reserve.
Right, thank you. In continuing this, if security premium is not paid but included in application money, then also security premium is credited.
If premium is not paid,
Yeah.
if it is included at the time of application, it must definitely be paid.
Yes.
Because it's simple like that. You are asking to the company that you want to apply for the shares, but you cannot pay the whole amount. So no company will allot you the shares. So it means the premium, if they're at the time of application, must definitely be paid by the investors, by the applicants, I should say.
So one question has been sent by Vrinda. Is it possible to create a company with unlimited liability as per Companies Act?
Yes. In the Companies Act, there's a provision that company can be formed as a limited liability company or an unlimited liability company. So in that case, according to the provisions, the shareholders will be liable to meet all the liabilities of the companies that arise.
But by default, it's a limited liability.
By default, it's a limited liability. Otherwise, you see the very benefit of opening up a company it's gone. The purpose or the benefit which the shareholders get is that their liabilities is limited. But if they have an unlimited liability, then why not have a partnership form of an enterprise?
This was the most asked question during the webinar. What is the difference between capital reserve and reserve capital?
Reserve capital is that part of uncalled capital which can only be called at the time of winding up of the company. It cannot be shown in the balance sheet. It is uncalled capital. Capital reserve is created out of capitalized gains or the balance of share forfeited after reissue. It again being a capitalized gain is being transferred to capital reserve, or when the running business have been taken over at a price lesser than the net asset value, it will be transferred to capital reserve. So capital reserve is created out of capitalized gains and will be a part of balance sheet under reserves and surplus. But reserve capital, although these two likes to be similar terms with just name exchange, the place exchange, but they have got different meaning at all. So reserve capital is the uncalled capital or portion of uncalled capital, which can only be called at the time of winding up.
Right. The question is being asked whether sections will come in the board paper, sections or subsections, will they be asked?
No. The sections and subsections you need not even write in your answers. CBSE has guided that student can write in his or her own words, but the meaning conveyed has to be same. So this very guidance shows that sections are not necessary, but sections are very essential to understand. Like section 53, it says that shares cannot be issued to public at a discount. Section 54 says it can be issued at a discount as ESOPs or sweat equity. So understanding becomes more clear.
And in fact, we are studying accounting only, not the law. So sections cannot be crammed, cannot be learned. But yes, to understand the concept, you have to read the section just.
So a few more questions. Garv is asking, what is the liability of company and shareholders? And is there any difference?
Liability of company is against the assets. So liability of company is to be paid against the assets by the selling the assets. Liability of shareholder is the uncalled capital or unpaid capital by the shareholder. So let us suppose when we are saying limited liability, it means only up to the extent of shares held by them. So suppose I'm having a share of 50,000 shares of a company of rupees 10 each, and till date, the company has only asked for rupees 7 per share. I have paid whole 7 rupees. So I am liable to pay rupees 3 per share whenever the company will ask for it. It means my liability is limited to the extent of unpaid amount, that is rupees 1,50,000. This is my liability, the liability of a shareholder. The liability of company is the liability or the borrowings made by the company, like debentures, like bank loan they have taken. That's a liability of the company.
So, Gar, to answer your question in continuation, whether it is limited or unlimited, it is definitely not unlimited. It is only limited
By
to the
default.
amount
Yes.
that is
Not yet asked for or
Asked
not
for.
yet paid by the company.
yes. So, then we have this question. If it is not specified in the question, then the excess application money after allotment will be adjusted towards calls or not.
By default, the excess application money will be utilized only till allotment. If the articles permit, then can be utilized towards calls, but will be treated as calls in advance and will fetch interest on that also. So by default, the company can utilize the excess money till allotment only, not towards the first call.
So if the terms of issue says, if here in the question it is said that excess application money, besides adjusting against the allotment money, it can be adjusted against calls. So in that case, it becomes calls in advance. But for sure, excess application money must be adjusted against allotment money, because immediately after allotment money becomes due to the company.
So language plays a very vital role over here. You have to go through the language very carefully, each and every word of the question very carefully. The excess application money will be utilized towards allotment only. The excess application money will be utilized towards allotment and subsequent calls. So read the question very carefully.
Even comma,
Yes.
even comma matters.
Yes.
तो आपने comma भी पढ़ना है. ये नहीं कि और special words जहाँ आए only, not only, no, none of the above, all the above. You have to be very, very careful when answering such questions.
So can we say liability of partner is equal to the face value of shares?
Liability of shareholder
Shareholder,
equal to
yeah, that's what she
face
means.
value of share. But if the whole face value has been paid by him, there is no remaining liability towards the company for that shareholder. So you can say the liability of the shareholder is towards the unpaid amount of face value, unpaid amount of issue price of the shares. You can say like this.
Mr. Moksh Babbar is asking, what is preliminary expenses?
The expenses incurred before the incorporation of the company. Abhi company start nahi hui hai, initiate kara hai, idea aaya hai, you have just thrown an idea, promoters have just given an idea. So to bring it to the shape, there are certain expenses which has to be incurred, which will be incurred by the promoters. So those are known as preliminary expenses. The expenses incurred before the incorporation of the company are termed as preliminary expenses.
And it must be written off in the year they are incurred.
So another question here, why is share application account debited or treated as an asset, justifying the modern approach?
Share application is firstly credited. I think they are asking share allotment is why it is debited of what
Share allotment, sorry, yes.
Share allotment is what? See, when the public has applied for the shares and the company has allotted them the shares, so there becomes a contract between the two parties or two things, between company and between the shareholder. And where the shareholder is bound against the contract, that whenever the company will ask for the money, ask for the calls, ask for the allotment money, they will pay in due duration time. So when the company asks for the money from the shareholder, either allotment or the first call, they just like become the debtor of the company against the contract. They have to pay the money within a certain time limit. So they becomes a debtor for the company, and by nature of that debtor, the amount is due towards them. So they are being debited at the time of call due or allotment being due. And when they pay the money to the company, when they pay the calls to the company, that debtor has paid the money, so share allotment or share first call has been created. Am I right, sir?
Yes.
So, okay, more, there are many questions coming up.
Uh-huh.
Sir, face value of shares is 10, issued at 2 premium, and the company has called only share application money amounting ₹3. Then the liability of shareholder holding 100 shares will be
Rupees 900.
900.
7 face value plus 2 rupees premium. Because see, the contract was that company has very well in beginning has informed the shareholder or the public that they are going to issue this much number of shares of rupees 10 at rupees 2. So the contract was for rupees 12 per share. The issue price of rupees 12 per share. So if you have paid only 3 till now, so liability remaining is 9 per share.
So what will happen to our money if the shares we applied for have not been allotted by the company?
So money will be refunded by the company to you.
What is the difference between face value and market value of shares?
Face value is the nominal value, say 10 rupees or 5 rupees or 2 rupees or 100 rupees. And the market value is at which price those shares can be sold in the market. Normally, the shares are quoted of a public company. They are quoted on the stock exchange. So every day there is a price for the share. So there may be buyers on the stock exchange. There may be sellers. So at what price the shares are sold and bought, that is the market price.
Thank you. So then this is, I think, a continuation of the previous question, wherein it's being asked that but unpaid amount is forfeited. So how can it be a liability in limited liability company?
If your amount has been forfeited, that means your shares have been cancelled. And when the shares have been cancelled, you do not remain a shareholder of the company. So whatever amount you have paid, that is forfeited. Balance will not be asked from you because you are no more a shareholder of the company.
Himanshu is asking how to attempt assertion and reason and case-based questions.
Himanshu,
So,
yes,
yeah.
yes, please.
Should we take it up in the next session?
I
Yes,
think
ma'am. Yes.
So the session on 16th November, we will take up all these tips and techniques and we'll explain the session which happens on the 16th of November.
At same time, we will take up how to answer MCQ questions, MCQs, how to answer AR questions, how to attempt the case study with the minimum possible time. Because examination is not only the test of your knowledge, it is also the test of your time management. So we are going to discuss that on the 16th.
Yes.
So we are sticking to the subject matter of the day.
So more questions. Is it possible that shares of a shareholder are partially forfeited?
Partially forfeited means no. You see, it cannot be. If the shareholder has not paid the money, company cannot decide that out of 200 shares, we will forfeit only 100 shares. Because the shareholder has defaulted for 200 shares. So company has to take a call either to forfeit 200 shares or not to forfeit the shares at all. So partial forfeiture is not possible in the same category of the shares.
But in that scenario, if you think like this, a shareholder having 500 shares and 3 rupees call was made due to him. So out of 1500 total due, he could pay only rupees 900. So it means he had made the partial payment of 300 shares. So his remaining default is now 200 shares only. So can the company forfeit the remaining 200 or not?
No.
No.
They will have to either forfeit the entire
Okay.
500
Okay.
or they do not forfeit any share
In any situation. Yes.
in any situation. Because it is not related to, you see, the shareholder cannot say that I am paying money for 300 shares out of 500 shares. So he will just simply deposit 900 rupees in the bank. So 900 rupees he has deposited, 900 divided by 500. That is the amount he has paid per share. So all the entire lot of 500 shares has to be forfeited, or none of the shares will be forfeited as is decided by the company.
Because his certificates are bearing 500 shares.
Yes.
This is another interesting question. How do we determine the nominal value of our share? Is it by based on our goodwill or our need? The face value, the nominal value. How does a company decide that?
It is up to the company. You see, earlier there was, a tradition was followed that the share per share nominal value will be 10 rupees. Now you see so many companies having a face value of 1 rupee, 2 rupees, and some companies have 100 rupees. So it is up to the management to decide the nominal value or face value of the share.
Right.
There is no legal restriction on it.
This is from other than share capital. In financial statements, fixed assets is termed as property, plant and equipment. But CBSE still uses fixed assets in some questions. So which one is correct?
You see, yes, you are right. Schedule 3 has been amended, but from 1st of April 2021. And 2021,
Sorry.
No.
Yeah.
Huh?
The past.
it has been amended.
It has been
Non-current assets,
effective 21.
they have, it is some date has been affected, but it doesn't affect our presentation in the balance sheet as far as the examination is concerned. Now the header is property, plant and equipment and intangible assets. And tangible assets has been renamed as property, plant and equipment.
There are two categories.
So property, plant and equipment is what is basically, it is fixed asset. Right? So if the term fixed asset has been used, continue using that. Because change has come after the syllabus. It will be effective from next year.
So where is security deposits shown in company's balance sheet?
Securities deposit.
Other advances, other long-term advances.
So Chavi, other long-term advances. And what is the meaning of contingent liability?
You see, liability, one is determined that yes, company has to pay 1 lakh rupees towards, say, workman compensation. One is contingent liability is that it is dependent on happening of a future event, happening of an event in future. Suppose a customer has claimed a compensation from the company and the company says, no, we are not liable to pay. So that customer goes to the court. Court will decide whether company is liable or not liable. So the liability is contingent on decision of the court. That is contingent liability.
And how is it different from commitments?
Commitment is capital commitment. Suppose a company is making a factory building, which will take about 3 years to construct. It must have spent certain amount during the year, say 50 lakhs. That has been spent, that will be shown as capital work in progress. Company has also planned that in the year 2, they will spend another 50 lakhs on construction of the factory building. Now, this is capital commitment. This is, you see why this is shown in the balance sheet as note, because the user must know what is the cash flow position, what is likely to be the cash flow position of the company in the next year or the year thereafter.
So there's one more by Sukriti. Do we need to take premium while calculating the amount of issued capital?
No, capital
No.
means only the face value. Premium is separate from the face value. Premium is over and above the face value. So share of ₹10 each issued for ₹25 per share. So 15 is the premium. And that security premium reserve is a part of reserve and surplus.
Yes.
Capital only includes the face value portion of the share.
And that is shown in as a share capital.
Yes.
So there's one more question that we had received, but it is related to admission of a partner. So should we take it here? Or?
Because that chapter has already
It's
been
already
discussed.
covered, yes. So when a new partner is admitted in partnership and his share is gifted by an existing partner, will the gifting partner receive any share in goodwill brought by the new partner, or will he be compensated for his gift? Also, what will be the sacrificing ratio in this case? It's been asked by Priyanshi Bansal.
Yes. Priyanshi, there is no goodwill compensation being paid against the share gifted by any of the partner. Gifted means you are giving voluntarily to the incoming partner. So there is no goodwill compensation against it. Now, second part is, what is the sacrificing ratio? The sacrifice ratio is beyond that gaining part, beyond that gifted portion. So let us suppose C has joined as a new partner. A gifted 1/5 from his share to C. This 1/5 from A to C will not be a part of sacrificing ratio. And the remaining share of C was being taken from A and B in the ratio, let us suppose 2:1. The sacrificing ratio is 2:1, against which the goodwill compensation will be paid for. So since the goodwill is not being paid against the gifted share, so gifted is not a part of sacrificing ratio. Am I right, sir?
Bilkul, sir. Absolutely.
So the questions have here been taken. We've covered all the questions that have been asked. Still anything remains or you need further clarification, please feel free to write to us on the email ID cagsgrewal@gmail.com. Also to mention here that we will be uploading MTPs and their answer keys on the app Grewal Conceptual Learning from tomorrow. You can download the app and access those MTPs and answer keys and practice them. They are going to be free of cost. Anybody can attempt those, access those MTPs and answers. So it's for your practice. Best of luck for the exams.
बच्चों, dear students, खूब practice करो, क्योंकि ये concept clarity जिसको भी होगी, वो अपने answers अच्छे तरह से कर पाएगा. और जो 45 questions करने हैं 90 minutes में, वो उसकी speed कैसे बढ़ानी है, उसके लिए खूब सारी practice करो. From whatever source you can get the questions, चाहे वो books हो, चाहे वो apps हो. जैसे अभी रीमा ने बताया Grewal Conceptual Learning, उसमें वो भी एक ऐप है जिसके अंदर roughly 1500 questions हैं which you can attempt on your mobile, on your laptops. So all the very best, and I must compliment Gaurav sir for giving such a wonderful explanation and answering all the questions that had come. सभी questions को उन्होंने इतने अच्छे तरीके से answer किया, और मेरी ये उम्मीद है कि आप सबको ये टॉपिक अकाउंटिंग ऑफ शेयर कैपिटल एकदम से क्लियर हो जाएगा. परसों on 14th Sunday, same time 5 to 7, we are going to take up accounting ratios. It's a huge chapter, so we will discuss that out. बहुत सारे questions होंगे, बहुत सारी आपकी queries होंगी. लिंक आपको फिर से शेयर किया जाएगा the same manner for which we have done today. Thank you very much.
Thank you.
Gaurav ji, आप कुछ कहना चाहेंगे?
Thank you very much, sir, for giving me this opportunity. Namaskar to all. God bless you all. All the best.
All the very best.